Welcome to The Explainer. Today, we are diving deep into the market outlook for August 26th. You know, on the surface, it looked like things were recovering a little bit. But as we're about to see, underneath that calm exterior, there's a serious tug of war going on, and some pretty worrying signs of weakness.
So here's the big question on everyone's mind, right? Monday's little bounce back. It seemed positive, but was that some genuine strength finally coming back into the market? Or is it just setting a trap for hopeful traders right before some major events hit later this week?
To really get a feel for the market's mood right now, you gotta look at this key signal from Monday, the Doji candle. Honestly, just think of it as a perfect stalemate. The buyers pushed, the sellers pushed right back, and at the end of the day, nobody won. It's a classic, textbook signal that the market just cannot make up its mind.
Okay, so that indecision, that's really just the tip of the iceberg. When you start digging into the data, you find all these contradictions that suggest this whole recovery is on some seriously shaky ground. Let's look at the first major crack.
The first big red flag is this huge split in performance. You had the main Nifty index rallying, getting close to that big psychological number of 25,000. But at the same time, the Bank Nifty, which is a crucial engine for the whole market, it actually closed lower. Every single time it tried to rally, it just got sold off. That kind of split is a major warning sign. And here's something else that's really telling. The market completely blew off some genuinely good news. We had hints of rate cuts coming from the US Fed. We had chatter about domestic GSD cuts. Normally that kind of news would light a fire under the market. But instead, crickets. Nothing. And when a market just shrugs off good news like that, it's a classic sign of some deep underlying weakness. The whole puzzle just gets weirder when you look at what the big institutional investors are doing. Okay, so for one day, on Monday, their actions looked bullish. But if you zoom out and look at their total positions, the big picture, it's the complete opposite. They are overwhelmingly bearish and were huge net sellers in the cash market. It's like they're saying one thing, but betting their real money on another. Now, this weakness isn't spread out evenly. Not at all. In fact, it's like we're watching two completely different markets at the same time with a performance gap between some sectors that is, well, it's almost perfectly symmetrical. And look at this chart. It perfectly illustrates the divide. The IT index just soared, gaining 2.37%, and at the exact same time, the media index plummeted by the exact same amount, negative 2.37%. You can't make this stuff up. It's such a crystal clear picture of a market being pulled in two totally opposite directions. The IT sector was basically the hero of the day, single-handedly propping up the entire Nifty index. This whole rally was led by the heavyweights, TCS and Infosys, both up over 3%. And that was mostly thanks to some nice upgrades from foreign brokerages. Honestly, without this boost from IT, the market's so-called recovery would have looked a whole lot different. Now, on the flip side of that coin, you've got the media sector, which just continues to struggle. Companies like Nazara took a pretty big hit, and the whole sector is just feeling the pinch from a slowdown in ad spending, especially from the online gaming world. And this isn't just a one-day thing, it's a continuing trend of weakness. So, with all this indecision and these deep cracks forming right under the surface, what is the market so darn anxious about? Well, it's staring down the barrel of two major events that are about to collide this week. On one hand, you've got the monthly options expiry. That always brings the potential for some sharp, volatile moves. But the real threat, the thing one analyst called the bigger sword, is this new round of US tariffs that kicks in on August 27th. And this isn't some small adjustment, it's a major escalation. And check out how the timing of all this just makes things even trickier. So we had that indecisive pause on Monday. Tuesday's probably going to be more of the same. Then, Wednesday, the very day the tariffs hit, is a market holiday. So all that pressure, all that uncertainty, it just gets bottled up until Thursday, when the market reopens right smack in the middle of the monthly expiry. Talk about a volatility test. This right here, this is the number that has everyone on edge, 50%. After that extra 25% tariff gets tacked on, the total rate hits 50. And as analysts have been warning, a 50% tariff, that doesn't just mean less business for some companies. For many, it could literally mean no business at all. Okay, so with this storm brewing, how in the world are traders and investors supposed to navigate these choppy waters? Well, the expert consensus seems to be pointing to one thing above all else: caution. The advice is actually pretty clear. First, if you're sitting on profitable weekly options, the guidance is to lock in those profits by Tuesday evening. Why? Because there's a real risk of a massive gap, either up or down, when the market opens on Thursday. Second, you have to prepare for that volatility. And third, given all these signs of weakness, some are even suggesting looking at bearish strategies, to protect yourself or maybe even profit from a potential move down. But you know what? Maybe the most unnerving signal of all isn't on any chart or in any data table. It comes from this one analyst's simple observation. See, for years, he, like a lot of us, was constantly getting those spam calls offering him a loan. But for the last 2 months, total silence. That sudden quiet from the lenders is a subtle but, wow, a deeply worrying sign that something might be grinding to a halt in the real economy. And that really just leaves us with a final thought to chew on. Beyond all the complex charts and the big institutional data, what are the small, everyday signs that you're noticing? The little real-world indicators that might be telling the true story of where our economy is actually heading. What's your no loan calls indicator?